You're welcome to the midweek edition on Market Pulse on News Central. Here comes your comprehensive breakdown of market activities. And yes, we have animal feed manufacturers, Livestock Feed. They're seeing their earnings per share rise within the first half of the year to a high point, at least in the last 13 years. Another rise that we're seeing this time is equity investment from retail investors. That's up, and then there's a decline in that for institutional investors within the first 7 months of this year if you compare it to the same period last year. So that's data we hope to get into what changed and what are the implications of this. And finally, on buy, sell and hold, with all the opportunities to invest, there may be constraints when it comes to liquidity. So should one consider borrowing to invest or saving to invest? All this and much more on the show today. I am your host, of course, Joanna Mustapha. Let's begin with activities on the NGX. And yes, the bears have interrupted the bullish run this week. It's midweek and the bears made an appearance. The market is down 0.32%. We're still market cap 55.575 trillion naira. We're seeing the all-share index as well at 96,203.65. Investors are trading the highs and the lows. They started picking profits on banking and telcos. Especially from the previous day rally. The decline is mainly, according to stockbrokers, due to selling pressures of investors on some of the mid and high capitalized stocks such as MTN, Access, Fidelity, Zenith Bank, amongst others. We're seeing the banking stocks taking that hit today. If you come to the top gainers, market leaders in West Africa for production and distribution of industrial gas. We're seeing industrial and medical gas there as a top gainer. The only top gainer 10% at 10%. We know that 10% is the maximum allowable daily price movement in the NGX. And of course, it's followed by Champs up 9.98%. We're also seeing the regular Oando, no surprises there, up 9.94%. Another oil and gas stock on the charts and also becoming a regular is Eterna. This is its second appearance on the charts this week. It gained 9.84%, and in between we have Livestock Feed. Safe to assume as well that the positive impact, positive sentiments on, their latest earning results are driving, investor sentiments there. Within the first 6 months of this year, Livestock's earning per share rose by 1,064.8% to 14.56 from 1.25 naira reported in the same period last year. So a significant, milestone there, and no wonder we're seeing it as a top gainer today. Top losers sticking out like a sore thumb is MTN Nigeria. This is a stock worth over 1 trillion naira. It's a SWOT. So, they have relapsed today after recovering from previous sell-off. Its market cap is now at 4.19 trillion naira. It's down 24.3% year to date, but today it took a hit, 7.91% down to 184 naira. That's what we're seeing. We're also seeing the likes of Tantalizers, which is making a frequent appearance as a top mover and as a top, loser, and sometimes even on the gainers list, right? Nymeth as well, we're seeing them there. Tom's White and Jais Bank all up there as top losers today. If you come to the top movers list for today, we're seeing Universal Insurance Company up there when it comes to volume of stocks traded. Japol Gold, Prestige, Tantalizers again, and of course Champs as top movers on the market today. Now joining me for a market breakdown after this break is Onome Ohwovoriole, the lead analyst, Money Africa, so stay tuned for that. All right, joining me now on Pulse of the Day is lead analyst, Money Africa, Onome Ohwovoriole. He is, here to give us more insight. It's great to have you join me.
Good afternoon, Joanna.
All right, good afternoon, Onome. All right, so let's begin, of course, tracking activities, on the NGX. Recent NGX data cited that retail investors have doubled their equity investments, right, from 640.44 billion naira in the first 7 months of 2023 to now 1.27 trillion in the same period for 2024. So, you can pitch that against, domestic institutional investors whose investments have, seen a significant dip between January and August this year compared to the period last year. So what would you say, first of all, the accelerated buy interest on institutional investors, on equities, what's driving it? And what else would you say, this data implies?
I think that for the retail investors, the drive is due to the fact that inflation has been sky high. And at least before the recent dip, you'd see that stocks generally had outperformed the inflation rate. So it's normal that in the pursuit of above inflation returns or in the pursuit of decent returns, you'd have retail investors want to invest in stock market. I've also seen, at least anecdotally, there's been a bit of renewed interest in the stock market due to the offers by the banks as they raise capital. So I think those are, in my mind, the key drivers for the retail investors. For the institutional investors, I'm guessing you may see that slight dip, maybe as they pursue fixed income investments. Treasury rates have been pretty decent till date. And I would say they're maybe slightly a bit more severe and they have a bit of more elbow room to pursue better returns compared to the retail investors.
And I'm sure the institutional investors may be more tactical with that, focusing on the fixed income side of things. And as you have pointed out, there has been a lot of appeal, right, from banks for, retail investors to, chime into their capital raising exercise. But let's come to activities today, right? Let's talk Livestock Feed Plc. We know it's a penny stock, but also a top gainer today amongst other penny stocks of late. They've released their earning results, and we are seeing earning per share rise to its highest in 13 years. And we've also seen, a sizable, substantial rally on this stock since early July. How strong a rally can we expect ahead, considering the recent released earnings? And, are there also other factors that we can see spurring interest in this stock?
Broadly, there's been an interest in penny stocks, and it's the usual wave you'd see is you have the big cap stocks rally strongly. After that, you see people tend to pursue penny stocks. So it's not unexpected. Zeroing down to the company, I think the company has also had pretty decent performance so far this year. Performance last year was quite poor, but numbers we're seeing higher revenue, which is quite good. And I think all things being equal, if they continue on the trajectory they are, maybe under 3-4 quarters, I think the company probably could be in a position to pay dividends, no matter how small. So the numbers aren't bad, and I think the company is in a good space right now.
All right, fair enough. And, as we've pointed out, it's a penny stock, right? And we know, some people tend to shy away from penny stocks because liquidity issues. So, what's an investor's play with, penny stocks, like this on the equity markets? How do they navigate holding, buying, or selling these stocks?
I think the thing is to get in early if you have to get in. And as you said, liquidity is an issue, meaning it can be sometimes difficult to exit because if you don't have a buyer, so you try not to go heavy with them. I think that for most people, really, if you really can't play getting in and out in a savvy manner, then you should actually just focus on more liquid stocks. And you should have a long-term view. I know that, yes, there's been a lot of buzz around the stock market, but ultimately, investing in the stock market is for the long term. So if you're not prepared to spend a couple of years in a stock and you are a retail or small investor, then you shouldn't put money into that stock. So you don't have funds tied or you don't have a liquidity issue if you can't exit.
Yeah, I mean, I've heard of an investor crying. He bought into, was it Julie stocks earlier on? And, yes, there was a rally, but he's struggling to get out. So, I mean, that's an interesting strategy that you have laid out there. Let's come to, banking stocks. They are a good number of them are in the red today, and they have been in the red of late, right? They've just started pretty much recovering, right? Slow and steadily. You know, we've seen that recovery within the sector after April's 24% index drop. Over the past 14 weeks, the sector has shown some signs of, you know, a bullish turnaround. So can we expect this recovery to be sustained? And are investors somewhat regaining strong enough confidence in the bank stocks, especially amidst this recapitalization exercise?
I mean, I think the rally would be sustained because if you exclude the recapitalization exercise, this year has been a pretty good year. Q1 numbers for the big banks were quite good. I think Q2 numbers would be pretty decent as well. So barring any shocks, I think the banking stock should continue to do well. And when you look at it from a year-to-date basis, even though the stocks have dipped or probably started to dip, had some dip after the whole recapitalization exercise was announced, then you had the windfall tax thing. Year to date, these stocks are pretty much in a decent space. And if they're able to deliver robust earnings half year, I think investors may just decide to focus on the near term and say, well, if this company can do 30, 40, maybe 50% better in earnings compared to last year, and if they're able to pay better interim dividends, which some people have postulated they might do, once this whole windfall tax thing is resolved. If that's the case, then I think the banking stocks will continue to recover. Yeah.
Okay. Yeah. Thank you so much for that, Onome. And of course, a good number of them haven't released their H1 earnings just yet. So we hope to see, you know, that and how that spurs activity on the NGX. But again, thank you so much. Lead analyst at Money Africa, Onome Ohwovoriole. Thanks for joining me.
Thank you.
All right. Up next, with all the demand and opportunities and calls to invest and also constraints on liquidity, you know, some prospective investors are having that constraints and maybe considering their options. Should they consider borrowing to invest, saving to invest, or should they just make do with what they have, living from maybe hand to mouth? Stick around for that conversation after the break as business analyst Frank Fagbo joins me. All right, with the various opportunities now to invest in equities market, the bank's capital raising, for example, or on the fixed income side, right? What we're seeing with the Nigeria's debut dollar-denominated domestic bond, it wouldn't come as a surprise, especially considering the harsh economic conditions when you see interested investors finding themselves limited by liquidity. There's just not enough money to go around sometimes, and you may not want to miss out on the opportunities to create or grow your wealth. So would you borrow to invest, save to invest, or, you know, live purely off of your daily income? Let us know on X at Nairametrics, buy, sell, or hold, borrowing to invest. We have business analyst Frank Fagbo joining me now to, you know, bring in more perspective. It's great to have you in.
Thank you very much, Joanna.
All right, so what are your thoughts on borrowing to invest, especially if you're eager and want to capitalize on the opportunities right now in the markets, both fixed income and capital?
So I think there are so many things you need to consider if you're borrowing to invest, because if you look at the current interest rate, our MPR right now is 26.75%. And if you look at that, once you borrow, and you borrow, obviously any loan you're getting is going to be pegged on that interest rate. More often than not, it's even higher. So some banks will give you a 30%, 35%, or whatever the case may be. And if your return on investment for the entire moratorium of that loan doesn't beat the interest rate, is there any point doing that? You're more or less running at a loss. So there's literally no point. I think the best way, one of the best ways to go about that is to make sure you create more value and make money, then invest.
More value and make money.
Yeah. Create more value, make money, and invest. That's the best way to go around it. Because if you get in a loan, there's a term, but I don't want to use that term here. If I go around that, there's a term for that. And it's more, they call it financial masturbation. Like you're borrowing just to make sure you invest. And what if it is lower than the interest rate? It's all going to fall. It's all going to fall. And it's going to be like you're walking on an eggshell. It's very, very risky.
So what you're saying right now is because of the high interest rate environment, it's not a good time to borrow, even to invest.
It's not. It's not.
Are there any investment options, you know, that can beat inflation and high interest rates right now?
So let us do it. Let's just be open with it. Look at what FGM bonds, the last FGM bonds that we saw was around the 18%, 19%,
Right, yes.
18, 19%. The last treasury bills we saw was around 22, 21%.
Yes.
And look at interest rate. Interest rate is 26%. And so for the fixed income part, except you're borrowing in dollars, and that can be, or that can make you beat inflation. But if you look at the equities market, equities market is quite interesting because if you look at the all share index of the NGX this year, especially from January, the first quarter of this year, oh my goodness, amazing numbers, as high as 40%, 30%, and that is way higher than the interest rate. So that might actually that might actually be a good play, but at the same time, you also want to have some portion of your entire portfolio to risky asset. Risky asset. When I talk about risky asset, I'm talking about the likes of crypto. I'm talking about so many other alternative asset classes. Look at what gold is doing. $2,500. That is the current price of gold, and it's currently at hovering around its all-time high. We've never had it this good, and this is happening because of what is happening in the global market. A lot of people are scared, and what's going to be the outcome of the election in the U.S. I mean, investors are literally diversifying their portfolio and trying to make sure they play some risky game. But you also want to diversify your portfolio, have some risky assets. And who knows, voila might just be the case. You just
voila, voila indeed. But it's not magic, it's strategy.
Yeah, absolutely.
So, I mean, what would you say should guide individuals in any case, because we're talking borrowing here, right, to invest? What should guide an individual's, borrowing? What should direct them when they're looking to borrow for any venture at all?
So you want to look at how long that loan is going to be. You want to look at the interest rate. Obviously, most interest rates are going to be pegged with the MPR, 26.75%. So it's going to be slightly above. And whatever you're borrowing it for, you don't borrow to fund your recurring expenditure, quote and unquote. Obviously, there are exceptions to that, but more often than not, you don't borrow to fund your expenditure, your recurring expenditure. You want to borrow for us to, not to fund your liabilities and your frivolities. You want to borrow to build asset that will generate revenue and that will bring in income. That's the way to go about it. You can't borrow to feed, or you can't borrow to eat, or borrow to, you get, what framework do you have to pay back that loan that would include the interest that it has accrued over the years?
So
that's one fundamental thing you need to understand. And also, if you want to borrow to invest, if you're looking at equities market, you want to be careful with the sector you're investing in. And I always say the tech ecosystem in Nigeria is doing amazing numbers.
All right, Frank.
And wait, I just want to tell you something about that.
Now.
If you look at the tech ecosystem, AI is a fundamental issue. Tech is an enabler. AI, let me give you, in just one sentence.
We are out of time.
Tech
Frank
is a gun, AI is a bomb.
Analyst.
And it just explodes the entire investment.
Thank you so much. A lot to say. Buy, sell, hold. Let us know. Would you borrow to invest or prefer saving to invest? Let us know on X at Nairametrics. And unfortunately, that's our show for today. And we're going to be leaving you with what's happening on the international markets. We do this every weekday, 4 p.m. West African time. It's Market Pulse on News Central in partnership with Nairametrics.